Welcome back, Hustle family. As you can see, we got a new name.
Yes, we do.
Michelle likes it, but I wonder
You
if
don't like it?
you like it, YouTube. Do you guys like it? Put it in the comments. No, I love it. I don't know why it took us so long to actually fill
We
it.
just changed it from
One
try
thing
to
fill it.
family.
One thing.
And you guys didn't come up with that either. Like, it was not just us.
Exactly. So we did put in to get it trademarked. So
Yes, we did.
bing bing, we're going to have that. We're going to own it. So that means we can make shirts, we can brand it. And if you guys like it, put it in the comment section. But the $250 a show is still waiting for someone.
Unfortunately, no one gave the name so that they could claim it. What was
So,
going on, guys?
If you guys have another name, put it in. But as we said, it has to be something that's trademark free so we can buy the rights of it.
Yes.
Now, Gishelle's voice is a little sore, so if you hear the raspiness, I promise you it is Giselle.
Malcolm has been giving me a lot of medicine and a lot
Not
of
enough,
TLC.
obviously. Not
A
enough.
lot of TLC. So
Yeah,
it's
too
a
much
lot
TLC this
better.
weekend. She had too much. Didn't let me
Lot
focus.
better. So,
Today's video is going to be from one of our YouTube subscribers. They had a good question. What is the difference between traditional mortgage and non-traditional, aka a QM, qualified mortgage, and a non-QM, non-qualified mortgage? So, as you guys know, a traditional mortgage is where you usually go to a bank, you give them 2 years, W-2s, 2-year
bank
tax
or
return.
broker.
Yeah, or broker, like us. 2 years W-2, 2 years tax return, 2 most recent pay stubs, 2 months bank statements, and they're gonna check your credit. Now, that's what you do for a traditional mortgage, and it goes through the regular process. I don't have to explain that, because if you've been found on this channel, you already know.
30 or 15 year.
Yep, 30, 15, and stuff like that.
Fixed rate.
Fixed rate mortgage. Now, that's what we call a QM. It goes by the guidelines of Fannie Mae and Freddie Mac.
Yes.
Fannie and Freddie. Now, a non-QM is things that we call our funky deals. And I actually like doing a lot of non-QM deals. For the one major reason is a lot of people who do non-QM don't think they can get a house. So I feel like it impacts them a lot more. And two, this is the deals that like everyone gave up on, like, oh my God, this can't be done. And those are when you look like a hero. It's like slaying a dragon. As you can see, we're watching an anime with a dragon in it. That's why it popped up. But imagine slaying a dragon that says it's doubt, it's fair, this can't be done. This is what you're doing when you do a non-QM file. So these are your files where maybe the person doesn't have tax returns, so they can't show it. Yeah, they have no income, and they just have a lot of cash. And they're willing to put down, they have no credit, or they have very, very low credit, so you don't want to look at their credit score, or funky things. The credit's low enough where Fannie Mae or Freddie Mac will be like, no, we don't want this file. You better go find someone else to do it. These are those files that most people turn around. Banks turn them down. The major banks are like, no, we don't want them. But this is when we go, we'll take it. Let's see what we could do. And this is where you come out. It's out of the box thinking a lot of times to get these deals done. So these deals tend to be a lot harder, but to me personally, they're almost more rewarding because the client doesn't think they can do it. Now, don't get me wrong. When you do a regular traditional home, a lot of those clients still think they can't do it, but this one is a lot more intensive. And
it's a lot more back end work going on.
Exactly.
A lot
More phone calls,
paperwork and stuff.
Connections with the banks, like, hey, no, can we do this? Can we do this? Brainstorming. And two, as I tell you guys, never focus on the money, but they do pay a lot better than doing a traditional because you're not bound by the set percentage rate of 2.75.
It's a lot more.
Yeah, so it pays a lot better. So one, you help a lot of people, right? Which is our main focus is always helping people.
And if you can go with a QM and a fixed rate loan for your client, then go with that.
Exactly. Don't push this to them just because you want to make more money. That's not what we're advocating for.
Yep.
But if they can't go traditional and they still want to buy this house, it's their dream house, then non-QM is usually the answer and the way you should take them. And also with non-QM doesn't mean you can't get a fixed rate mortgage. You can. They do 30-year, 15 years. They do it as non-QM products. It's just that they tend to cost more. And if you do like ARM or variable interest rates and stuff like that, they tend to give better pricing, meaning the rates are better or the cost, the amount of the money that they're charging for closing costs and stuff like that might be less. So it all depends on the borrower and what you want to do. So for example, I like giving examples. If you do not have any kind of W-2s, no income, you're saying, hey, Malcolm, I want to buy a house. I have absolutely no income, but my credit score is a 700. Then I would say, okay, definitely Freddie Mac and Freddie Mae are going to say no to you, but we can still do the loan. Now, with these loans, they tend to make you put down more money. They're going to say, hey, we want you to put down 15 or 20 or even sometimes 25% down. So this is cash that they want to see in your bank for at least 30 days, and they want to see readily available to put down on this house. Now, if you have that and you can cover closing costs, because there are closing costs, and as I said, the closing costs tend to be higher. So on average, a closing cost is 5%. These closing costs might be, just throwing this number out there, it might not be this high, it might be anywhere from 8 to 10%. So you're throwing out a lot more money. So in total, you could be at anywhere from 25% to 35% of cash all into the property of your dreams to get this closed. But like I said, not a lot of people are able to close these files. So if they come to you, that means they really need help. And for whatever reason, this is the house that they're willing to put down so much money to get. Does that make sense?
Yes, it does.
So if you're doing this, make sure it's right. It fits the borrower, because just because people say, hey, I have no pay stubs or whatever, I have no income, doesn't mean they have the 25 to 35% of the home value that they're willing to, not the home, of the home price that they have readily available to put down to do this deal. Sometimes people think they have the money, but then after calculating how much it is, they're like, oh, whoa. You know what? I think I'll wait 2 years until I have some pay stubs to get this file actually going.
Yeah.
So it all depends on the borrower, but those are the difference between non-QM and
QM.
Ooh, you're good, Giselle.
Thank you.
Now, if you have any more questions, make sure you put in the comment section. This is the real Mr. Marcelle, and I hope you loved it. Hustle family, we are over and out.